Alright, YouTube, stocks by the numbers, welcome back. People wanted a quick update on D-Wave Quantum, ticker symbol QBTS, listed here on the New York Stock Exchange. We came back to this stock like right here around this candle, like September 12th, and the stock was about $1. It was about 99 cents a share, and I was mentioning that this was our key support level here to hold, and it did look like we could potentially pop out of this wedge and have a little bit of life. However, in the numbers, I was expecting it to break this line and continue to drop lower. I laid out this key level here of 60 cents, and obviously, as you see, over the last about 4 weeks, the stock did not drop that low, but ended up bouncing and dancing around this support line. Then we had that break there October 4th, as you see, top of the screen, about 84 cents this stock went down to, and since then, over the last several days, it has actually been running up and climbing up. So now, if we come across here from this top back in July, and then this top back August 1st, we come down, this now purple trend line here coming across, this is now our resistance line. And this line across the bottom here that it was holding broke and regained. This is now our support line. But the only problem is, see, now we're technically, on the technical side now, we're technically forming a symmetrical triangle, which means we can either break higher or we can break lower. The good thing is it actually came up, looks like high of 113, right around that 20-day moving average, and then had a slight rejection, as you see, sitting here now, $1.09, up almost 7% on the day. So, unfortunately, with a situation like this, with the symmetrical triangle forming, we can now either break higher or we can break lower. And unfortunately, it's kind of undetermined until it actually happens. I do feel, I remember last time we looked, the company was holding some debt. We have tens of millions of debt. We have a negative book value. And also switching over to the assets and the liabilities. We mentioned that right now the total liabilities are outweighing the assets right now, which obviously is never a good sign. And of course, looking at the financials, you can see the company taking more losses in the last couple of quarters compared to the few before that. So that's why, looking at all of those kind of rocky numbers there, I was under the impression that we would break and we would continue downward. But of course, last couple of days also have added to a slight market rally. And, we're seeing the Dow rallied like 600-700 points from hitting that low coming out of the weekend there with that news from Israel and whatnot. Now, obviously, a company like this, based out of Canada, really wouldn't be affected too much because, again, as we mentioned, going back to the previous quarters, they were coming in with a couple of $1 million. However, they were just slightly missing on analyst expectations. So, unfortunately, this is another situation, again, falling into the small cap category of, like your Stems and your Soundhounds and even like Nikola. Like these companies, we want them to do well, and in theory, we feel that over the years they may climb and grow for us and whatnot. But again, regardless of how much we want it to grow, it all really does come back to the earnings. That's what I try to tell you people. Even if they're incurring losses, right, and the losses are outweighing the revenue coming in, what you need is you need the revenue to come in above expectations, not have these misses like this. Because the problem is, I'm going to tell you right now, looking at that bleeding, right, and the way it accelerated over the last couple of quarters, see, that's what's keeping the stock down, in my opinion. It's the consistent bleeding of millions of dollars across the board. That's why if they could bring it down, they will bring it down. That's what I need you guys to understand. I need you guys to start learning what stocks could come down in value so you don't force your way in. What stocks are just drastically overvalued in the numbers, so as much as we want to own them, it may not be worth it, because I'm sure a lot of people watching, I'm sure there was a situation in the past where, stock was just up and up, consistently climbing, you felt it was unstoppable, so you bought it, and then boom, they correct it, it crashes down, it misses earnings, or someone steps down on the board or something like that, and then all of a sudden the stock starts to take a hit. Now it's in slide bearish momentum mode, and it takes several months, potentially years, for the stock to get back to where you were. So now you can finally break even on the situation, or just take a small loss maybe if they're holding a big red position for quite some time. So that's why you have to look at these numbers, as much as a lot of people don't want to. A lot of traders just want to talk about the technicals, and I can appreciate that. But again, like a situation like this is what I mean. In my opinion, I wouldn't risk it here at $1.09, right? Because I already mentioned, in my opinion, when I looked at the numbers, that the stock should go lower and not higher. However, again, we were bouncing around this support line. We had a flash break, and now we have a flash pop. But again, we're coming into a symmetrical triangle, which technically means it can either go up or it can go down. And I appreciate the fact I mentioned last time that we could potentially have a run-up here coming out of this wedge, bouncing off this line, getting back to this one-year fib of $1.38. And of course, it still very well could happen. But in my opinion, I do think it should break down instead of breaking up. And I think it should drop back down into the 80s and into the 70s. And I think then, in my opinion, I would be a buyer. Again, I'm not exactly sure how low it's going to go. I don't know if they're going to bring it back down to 40 or sub 40 cents. But even a break like this, like how it broke down to like 84, 85 cents, on the break of $1, in my opinion, that's where I would be adding shares. Right? So obviously, in hindsight, I know I'm coming a couple of weeks late, but as this broke down like into 90 and like 88 cents, if you started to piece your way in, like, understandable. And now you have a situation where it hit and looks like technically it just slightly rejected this moving average. But now in this triangle, if we break back down and we come back down here, you can see right side of the screen, now we're at like 80 cents, hypothetically, right? So that's what I mean. Now on the break of the recent pattern, now with shares being sub $1, I, in my opinion, would consider adding even more shares to the position, down there at sub $1. So right here at $1, I mean, I guess you could make the argument that the stock is fair valued because, again, the numbers are a little rough. However, at $1, we're looking at a market cap of around 100 million. So that's why I can appreciate the fact if a lot of these newer, smaller companies, if they have some IP on the back burner, if they're bringing in a couple of $1,000,000, even though they're, have some debt on their balance sheet, if Wall Street wants to keep the valuation at like 100 to 300 million or something like that, it's understandable, because I'm not necessarily saying the company should be worth like $2.5 million, right? That might be a little extreme. However, again, we did look at a lot of the fundamentals and a lot of the economic data, and it's showing us that we have, again, negative book value per share. The company's losses are significantly outweighing revenue coming in. Plus, when revenue does come in, it's not meeting analyst expectations. Now losses are widening over the last couple of quarters compared to, 3, 4, 6 quarters before that. So that's what I mean. That's why when you have consistent negatives like that, it's more understandable that the stock will go down before it goes up. So again, more about pricing and timing. In the long term, again, could definitely work out pretty well, but this is why I always talk about pricing and timing and looking at the fundamentals and analyzing the earnings and the assets, the liabilities. Again, assets minus liabilities yields equity, right? That's the equation. Assets minus liabilities equals equity. And this company right now has liabilities outweighing assets, which means that they have negative equity. And that's why the book value per share is like negative 22 cents. So if you think about it, again, it may be drastic, but like if they crash this down right here, 60% from this level over the course of the next couple of weeks, and they bring it back down to 40 cents, as much as that would suck, it would kind of be justified. And that's why I kind of put out kind of like the mid-range there, like 60, 70 cents. This was kind of the range I was talking about last time when I did the video, because it could very well happen. It could very well happen. And again, I always say, take what the market gives you. Don't force trades. And a situation like this right here in this moment, I feel like you'd be forcing it. Because again, the numbers are telling us we may go lower, but we did just have a rejection of the moving average. but we're now setting up into this triangle, so we're unsure. So this is what I mean. A situation like this, where it's technically unclear, you should not be looking to get in right now. You should wait, right? Just like they said, wait for confirmation. Well, I always say it anyway. Excuse me. That's what I would do here. I would wait for confirmation, right? If they break it up and it starts climbing, then you know, okay, I can ride this to, $1.36, $1.38 around that fib, and I can get out. I could do, a quick little flip, quick little scalp trade there, make myself a quick 10, 20% or whatever. But of course, on the flip side, same thing as well. Maybe you're looking to buy this at, $1, but right now it's slightly above $1, but it could break down. So that's what I mean. You wait for the break, you wait for the confirmation, and then when it's sub-dollar, you start piecing your way in. And you save yourself a couple of bucks. So instead of forcing my way in at $1.09, I waited for 89 cents, 79 cents. So obviously, that's basically what I have to say about that. Even if it does break up, it could potentially climb up to the fib and then kind of just ride along this trend line here going into these earnings. And obviously, in my opinion, this will give it a little bit more direction. Because again, technically from the time they started trading, they have not beat earnings on the revenue side. And, expectations here, they're still relatively low, 2, 3 million, just a couple of million and change. So that's why 2.893 million here, estimated for around November 9th. So still roughly another 1 month from today. But, in my opinion here, if the company comes out with like 299 and they beat that expectation for the first time, I actually think Wall Street is going to reward the stock. And, that's what I mean. You can have like that random rally, like something like this, and you can have just a random explosion back up to like 180 or 205 here, and then it could bounce around these fibs, and all of a sudden the stock that couldn't hold, $1 consistently is now, maintaining like $1.80, $1.90 moving forward. Now all of a sudden it has more support. And of course, same thing moving forward, right? So you would go to February of 2024, and then whatever the expectations are, if the company, again, somehow is able to actually beat and come in above what analysts expect, I'm telling you, they're going to reward the stock, and they're going to run it to the high 2s and potentially even back to the 3s, because it's feeling like that situation. I don't know how to describe it. Sometimes you do have those gut feelings, and I know technically, on Wall Street, it might not be, the best metric to use when you're talking about analytics, talking about that gut feeling. But again, I don't know. I just really feel like it's almost like they want the stock to do the right thing so that they can reward it. And again, coming all the way down off these lows, and now having this pop, but having the pullback, and then having the bounce. That's why, like, technically we had the low of the lows, but now technically we have higher lows, right? And we made higher highs, like, so that's what I mean. So, like, technically it should be in, like, this upward momentum. But again, right now in the immediate short term, it could break either way out of that triangle. But this is going to be key. Because if they want to keep the stock now in this upward momentum, they're going to have to beat these earnings. I don't care what anyone says. They're going to have to beat the earnings. And unfortunately, right now, if we go back and look at the history of the stock, chances are they're going to miss earnings. So this is why, again, I feel like, they gave it some life here after completely crashing it down to 40 cents. And then obviously anyone who got in at sub $1, and then you wake up and the freaking thing's above $3, of course you're going to take profits and you're going to sell. So I'm sure a lot of people made some quick bucks there. And then we had this downward consolidation happening into this wedge, and I mentioned that we would bounce off this line here, but we actually broke out early and then came and tested the line. And you can see, look at that, like for a full week, like 5, 6, 7 trading days, we were just bouncing right off that line. And then we ended up having to break down and then to pop back up. So, that's why sometimes the pattern doesn't work out exactly as we anticipate. But of course, you can kind of position yourself in a general direction, right? If this was a company that had more solid, stable financials, well, you would have had a run up, and now you have a downward consolidation with people taking profits, and we're forming this wedge. So, there's probably like a 90% chance that you would pop out of the wedge, and this would be viewed as like a bullish pattern as opposed to a bearish pattern. But again, this company technically has been struggling on the financial side. So they don't owe you anything. And unless, like, a double bottom perfectly forms at a discounted price, like, then you should, like, definitely have like a 90-95% chance to see the pop towards the upside. But right now, again, in my opinion, just a little undetermined. So in the long run, it might be a good play. And as of late, this actually is a pretty decent reaction. But here we're getting to the apex. Looks like could be next Monday at the latest. So this week here, what's today? Tuesday? Yeah, today's Tuesday the 10th. So this week, the next couple of days going into Monday, right now in these next couple of days, that's going to determine where this stock is going to go. So again, for anyone who just recently got in, I hope it pops up and potentially tries to get back to this fib level, and maybe you can make a couple of bucks here in the short term if you wanted to trade it. On the flip side, if it breaks up, right, and now you're upset because, I was going to buy it at 95 cents, now it's at $1.30. Well, again, I would say the financials technically aren't there, even though the technicals are starting to look a little more decent. So if we did have a breakout here on the confirmation, I would still remain patient, and I would just wait for a slight pullback down to $1, sub $1, and then hopefully you'll have another little rally, a couple of days before these earnings here on November 9th. And then, like I said, if the company is able to actually beat estimates for the first time since getting listed, if they're able to come in with 2.9, 3.1 million here and actually beat this expectation, the stock will get rewarded. And you could potentially see like $1.20, $1.30 and have a jump right up to this next fib of about $1.80, which, of course, percentage-wise would be a phenomenal return. So, I do still feel like anything can happen here with D-Wave Quantum, but I would just be skittish because, again, you can see like the tightening and the descending, and then boom, now look, we have, multiple white candle or black candles, however you want to look at it, green candles, but multiple up candles just over the course of the last couple of trading sessions. So that's why we could potentially keep going. However, top Bollinger Band 109, and we rejected off of that moving average, and you can see now the stock is sitting right at the top Bollinger Band of 109. So a little, again, kind of undetermined. The MACD has been slowly climbing over the course of about the last 4 weeks since we looked. So now that's what I mean. It could either reject here and go back down to like 97 cents, the mid-Bollinger Band, or it could potentially get above that 20-day moving average maybe tomorrow, and it could potentially keep going here up to the next 50 and 200 days here on the daily, 122, 124. So, again, could kind of go either way, and that's why I would say I would wait for confirmation. I would not try to force my way in. The RSI here sitting at about 52 3/4, so it definitely has more room to grow. So this is why I'm saying they could potentially pop it out of this symmetrical triangle and actually bring it up to like the 120s and the 130s before trying to bring it back down and sell it off going into these earnings. On the weekly, again, you can see, look, you got your 50-day moving average here is now pulled back. Now it's at $1.38, right? So we can tell on the daily chart and on the weekly chart that $1.38 is actually a pretty key level. And again, in the short term, you could see that run from this point. You're looking at, like a 28 to 30% move here, just from $1.08, $1.09. So in the immediate short term, you could make a quick scalp, but technically, according to the numbers, if it runs up and hits that level, it should technically reject and come back down to around $1 and wait for that next quarter earnings. But I do have a feeling that they may pop it up to this $1.38 and then pull it back going into earnings. The MACD still looking relatively flat, potentially about to cross to the upside, which again could add momentum to bring it up to the 130s or 140 level maybe. But in the short term, again, I'm more of a numbers guy. as opposed to a chart guy. Of course, if a pattern is setting up, we'll call it out. We'll see if it's a bullish pattern or bearish pattern. But again, the numbers do not lie, and as much as people refuse to admit it, the actual fundamentals and the revenue and the earnings per share, that is the lifeline, that is the bloodline of the stock, of the company. And if those are shitty and inconsistent, your returns in the stock are going to be shitty and inconsistent. And that's basically all I have to say about that. So could go either way. Potentially, again, we can check in like around this time next week, like next Monday, next Tuesday, and we can try to see where it moved out of this apex here in the symmetrical triangle, and where we could potentially see it. And of course, about 4 weeks from today, we can come back and we can see how the company reported those revenue and earnings numbers, and then we can try to determine from there if we could get in lower at 50, 60 cents, or if here at $1.25, let's say, the stock may be viewed as fair valued, and they're expecting bigger and better things. So, just start piling in, start piecing your way in. But again, wait for confirmation. There is nothing wrong with being patient just because the market is open and you have cash in your account, or you might like the stock, right? These are piss poor reasons for you to buy a situation like this. Now, if we break this symmetrical triangle and we come down to 62 cents, right near this key level, and we were talking about this potential break and drop down, then I can understand you saying, nah, you know what, it's down at 62 cents, there's an overreaction, I'm buying this at a discount now, sub $1, I'm looking for a long-term play, this is a decent entry price, right? As opposed to forcing your way in here at, 92 cents, right, as it breaks and it continues to slide and drop, and then you're down 30, 40, 50% immediately. So this is why I say we don't force trades here. We take what the market gives us. And right now, the market is literally telling you, just hang out for a little while and see what happens. That's my take on it anyway. But I know you guys asked for an update. I know I had a couple hundred views on the first video, so apparently there are a lot of you out there who are watching this, keeping an eye on it, or currently have a position in it. So, of course, like I always say, whether I believe in a stock or not, I'm sure a lot of people own this one, so I want to wish you all the best. I really hope down the road it works out for everybody. But right now, personally, in my opinion, I would be patient. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. Share the video, like the video, and of course, subscribe to the channel. That is our handshake agreement. I'll do updates on these small cap stocks. I'll analyze large cap companies like Campbell's. I'll try to bring you any situations. Of course, Discord link in the description of every video as well. If you want to come into Discord, you want to BS, you want to ask me questions about stocks, or if I potentially have any day trades or scalp trades, I'll throw out my opinion there. Maybe you can make a few bucks in the short term. I'll do all of that for you guys. Just do me a favor. Handshake agreement. Help me help you. Push the subscribe button. But, of course, more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by, and I'll catch you guys in the next one.